Hey everybody, welcome to session 2.4, where we're going to be talking about tax forms and tax compliance, specifically the cost of tax compliance for nonprofit organizations. Then we're going to talk about the 1023 and the 990. So let's talk a little bit about tax compliance. The idea of tax compliance is the amount of money, time, or effort you have to spend just to file your taxes, not even the actual payment of your taxes. In any given year, you probably pay a certain amount in income tax, but on top of that, you also are probably paying for TurboTax or Tax Act or some other online service, or you're hiring an accountant like a CPA to do your taxes. Or, if you're a poor college student, you might just be going online to find a free filing resource, and then you file your 1040 easy, and that's what you're filing. The point is in all those cases, it takes money, time, and effort in order to just file your taxes. And this is a reflection of this idea of tax compliance. What do we have to do to be in obedience to the tax laws that doesn't include actually paying your taxes? And so tax compliance can be expensive if a tax system is complicated. And for nonprofit organizations, specifically charities, but also all exempt entities, filing is complicated. And because it's complicated, it can be expensive just to file your taxes. In fact, how expensive? Well, here's a study that was done. This is from a couple years ago. I haven't seen more recent data on this, but a group of economists did a study on estimating the cost of tax compliance for nonprofit organizations, specifically C3 organizations. And what they found is that charities spend back then, 2 decades ago, spend about $1.37 billion on federal tax compliance. This is hiring the accountants, or if needed, the lawyers, or dedicating staff time, or any number of things, putting in, certain processes to make sure you comply with federal tax laws. When we look at the tax forms in question, you're going to see why this is so expensive. But that number by itself, $1.37 billion, is huge to us personally. But how big is it compared to the nonprofit sector as a whole? Well, we could compare it for example, the revenue of nonprofit organizations that year. And so if you took in all the revenue considered all the revenue that nonprofits took in that year, the cost of complying with the tax law, and they're not paying actual income taxes, they're just complying with the requirements of tax law, is about 0.4% of revenue. Now that might seem like a small number, 0.4% doesn't seem like very much, but the reality is that's kind of a lot on a relative basis. You guys are not spending 0.4% of your total income in a year just paying to file your taxes. You're not, you'll pay more than that in the actual taxes, but you're not paying 0.5% of your revenue to TurboTax so that you can do your taxes every year. You're not paying that much to an accountant every year. And so this is actually kind of a lot on a relative basis. What if we looked at it as a percentage of contributions? Like, let's say you're a charity that gets 100% of your income from donors. And if that's the case, how big can this be? If you look at all the contributions that nonprofits received in that year, back in 2006, and compared the tax compliance cost, is 1.6%. So that's like $1.50 being shaved off every $100 donated. That's a lot. And again, it reflects how complicated this is. Finally, what if we compared it to something called tax expenditure? And tax expenditure is what the government gives up by not taxing nonprofits. You can almost think of this as like a spending program that comes in the form of a tax break. Instead of the government collecting the money and then spending it on something, they're incentivizing this activity by just not taxing it. And that's true for nonprofits. It's true for interest on mortgages. These are considered tax expenditures because it's a way that the government is basically giving up tax revenue in order to foster a particular kind of activity. And in this case, it would be charities. And so how big is the compliance cost as a percentage of tax expenditure? Well, it's almost 4.5%, which is a huge amount. Basically, if you look at this tax expenditure, and by the way, in this year was about $31 billion that the federal government gave up because their charities exist and have tax-exempt status and tax-deductible donations. Charities are, so if you think of it as like a government program, this tax exemption, 4.5% of it goes just to legal compliance with the program. That's pretty expensive. And so anyway, so it's an expensive process to file and prepare your taxes and to comply with tax law for nonprofit organizations. So let's look at the forms that show where the complexity is found. And let's talk first about Form 1023. This is the form that hopefully you only have to file once for a given charity. And this is the form you file to get tax-exempt status. And so if you want to be a 501c3, you file the Form 1023, asking the IRS to give you that particular tax-exempt status. Now, when you start a new nonprofit, you incorporate it in a state like Utah. And if you incorporate in the state of Utah, you're not filing your 1023 on day one. It takes some work and effort to file a 1023. And even if you file it on day one, you're not getting an answer right away because it often takes months for the IRS to respond. Sometimes weeks, sometimes months to respond to a 1023 application. And so what happens in the meantime? You don't have tax-exempt status, but you want to raise money from donors. You want to operate in a way that's tax-free on your income. What do? Well, the IRS allows for a 27-month retroactive period. So if you start on January 1st, 2025, and then you finally file your form on January 1st, 2026, that's just 12 months of time that you've been operating from the day you started. And the form, if your application is granted and you get what's called a determination letter back from the IRS saying that you're exempt as a charity, then that status is retroactive back to the day you started. You have 27 months to file that form for it to be retroactive to day one. This is a long and complicated form. When you file this on paper, it's going to be, I don't know, the paperwork's going to be a half an inch thick probably. And it includes all sorts of things like detailed explanations of your activities. You have to include attachment documents like your articles of incorporation and your bylaws and bios of your directors and so forth. And you also have to include financial projections at least a couple of years into the future. And if you've been operating for a while, you also have to put in financial reports from previous years. One thing to know also about this form is this is public, meaning that the public has a right to look at your 1023 just by asking for it. The law requires you to provide a copy. You could chill the hearts of many nonprofits just by calling them up asking for a copy of their 1023 because most are not going to have one handy. And some will not even know what you're talking about. In fact, a mistake you sometimes see nonprofits make is when they file their 1023, they will send their only copy off to the IRS. You got to keep your own copy. Ideally, you scan it so you have it digitally. There is an alternative because this is a big, complicated, and expensive form. There's an alternative to this, which is the 1023 EZ. And this is a form that you file electronically, and that's the only way to file it is electronically. And it's something that you can use to apply for exempt status if you're a small nonprofit. This is limited to organizations that are bringing in less than $50,000 a year in revenue and have less than $250,000 in assets. You may someday in the future grow to be bigger than this, but that doesn't mean you can't use the 1023 right now. If you're an organization that is this small and plans to be this small for at least a few years. That said, if you are a church, hospital, school, supporting organization, or a nonprofit engaged in joint ventures, you are not allowed to use this form. But like I said, this form is cheaper as far as the filing fee is concerned and shorter. It takes less effort to fill it out, quite a bit less actually. Okay, let's talk next about the 990. The 990 is the annual tax form that you file if you're a charity. And so, for example, if you, as an individual, you're filing every year either a 1040 or a 1040 EZ. That's your personal tax form that you file every year. Corporations, regular corporations, they file a form called an 1120. That's their annual tax filing. And then nonprofits or charities, they file a 990. And you have to file unless you're a church. You don't have to file if you're a church, no matter how much money you bring in. Or you're a charity making less than $50,000 a year, then you don't have to file then either. Although the organizations that are not required to file a 990 or 990Z do have to file a form called a 990N, which is just an electronic filing. You do it on the website that tells the IRS, yes, we still exist. And that's about it. Now, there's an important point to bring up about this idea of filing your taxes every year, which has to do with the statute of limitations. The statute of limitations is a concept in the law that prevents a lawsuit or criminal charges from being brought if enough time has passed since the crime or the wrongdoing was discovered. And for a lot of things, for example, the statute of limitations is 3 years. So let's say you break a contract with somebody and they know you broke the contract. In most states, you have that person has 3 years to file a lawsuit against you. If they try to file a lawsuit after 3 years, the statute of limitations has run, is what it's called. The clock has run out, basically, and they're not allowed to file against you anymore. There's a statute of limitations that applies to tax filings, which is also 3 years. So if you send in a tax filing to the IRS and they don't do anything about it for 3 years, and then during year 4, they say, hold on a second, in that form you said this and that was illegal, blah, blah, blah. Well, because you sent them the form and they didn't act on it, the statute of limitations has run out. The clock has run out. But if you don't actually file, if you go without filing your form like you're supposed to, then the clock never starts. And so the IRS can always come back at you for any year in which you didn't file your taxes. And so this is why it's always important to make sure you file your taxes, or if you missed a year, you do it retroactively, because it protects you against IRS claims. This form, the 990, is public, just like the 1023 is public. The difference here is that it's only your 3 most recent 990s that you have to provide to the public if they ask. We're going to look at the 990 form and the 1023 form in class. And because these are both public documents, the best advice is only include the information that is required and that you want to disclose. Don't include information you don't want to disclose if it's not required. There's a lot of room on the 990 and the 1023 to say things that you maybe don't want other people to know. If it's not required to put it in there, then don't put it in there. And we'll give you some examples of where that would be true. And that's it for this recording. See you in class.